Hey traders, Raghee here, and in this free video I'm going to talk about the two markets that I've continued to keep an eye on, that I'm bearish on, and what they mean to the larger picture in terms of the global economic slowdown, which is a narrative that comes around again and again like a merry-go-round. That's how the news works, and today that seemed to really take its toll on a number of markets. So that is copper and crude. These are really the two harbingers of sort of growth or contraction in the global economy. And both of them really are quite bearish right now. Now, it might seem that crude sort of took the scenic route to bearishness, and it sure did, because in this area would typically be the correction that would suggest a continuation to the downside. And instead, we had all of this happen to the upside, and I think in large part the reason for a lot of that movement to the upside had to do with US-Iran tensions, US-China, a lot of reasons for crude to either rally on a supply disruption or on some modicum of optimism surrounding US-China. So we take the scenic route to the upside, we test the 200 exponential moving average, we test the $60 a barrel mark, and then suddenly crude does this. Now, one of the things that I talked about in a webinar that I did yesterday called Dow Theory Decoded was the fact that Charles Dow, contrary to many technicians and chartists today, did not underestimate the impact of news on the market. And you know, a lot of chartists and technicians tend to carry that around, this ignorance of news, this news doesn't matter attitude, like a badge of honor, and I don't want anyone to develop that, what I believe is a bad habit. I don't want you trading news, but I do want you respecting the impact that it will have on price action. Now, in this case, when I say news, I mean a scheduled event. In this case, the expectation for the OPEC meetings to wrap up and there to be a post-OPEC letdown. Now, this post-OPEC letdown is going to be based on what? The market getting most of what it expected it would get, meaning not an increase in the barrels per day, right, in any kind of cut in terms of barrels per day, but rather in this situation, what is the extension of the current production cuts? In this case, expectations were for 6, but we got 9. So a little bit of strength as that news came out, and then as there really wasn't anything else from the OPEC or OPEC plus conversations, the market had that whole buy the rumor, sell the news reaction. And then, of course, the global economic narrative, which is negative to copper and crude, sent crude down sharply. Now, I also want you to think about what it means to be down sharply, and I use this tool from AutoChartist to be able to gauge that. So let's look at the AutoChartist for a moment, and what you'll notice is, number one, for a Tuesday, what's my typical price movement? I typically like to start at the average to the high. Those are typically exhaustive moves, $1.50 to $1.70. That's the typical historical price movement range. Today, take a look. We had a high at about $59.50 and a low of 56. Well, what kind of range is that? Obviously, it's far exceeding the typical $1.50 move. In fact, as you'll notice, it's about 3x, or 2x, sorry, it's about 2x. 3-point move would be 2x the $1.50. You get up to about $1.70, you can see we're 2x. In other words, we're twice the typical price movement range. So yes, this was a dramatic move to the downside. So it's not just a big move because it's a large candle. It's a big move because it exceeds the typical price movement range, and that's how I measure it. Now, the next question is, how likely are we to continue lower? And I'm not looking for new lows at all. I'm actually looking for this market to basically continue to move to some nearby support levels that I would like to see us reach. And we have puts that we've held from this area. Still plenty of time. We have about 30 days to expiration on these puts, as well as a short in XOP and a short in Exxon. So these are, in line with the crude short. So again, I'll take a theme in this case predicated on crude, and add in other markets that are trading well with it. So I don't believe in this current environment traders are necessarily going to want to go long crude into a long weekend or into a holiday affected weekend, really, or holiday affected week. But it's going to be interesting to see how the market responds to the API. And when I say responds to, you'll notice the wick that we had here on the 2 million barrel increase. So the market expected a drawdown of 3 million barrels. The API number came in at 5 million. So a quick move to the upside, and the market basically found the status quo that it had before the API number. So I'm looking for more downside in crude, but here's the thing. I won't be surprised if we do move up just a little bit because of just the drama of today's sell-off. And then let's just see if we can't start to trade lower from there. That's the kind of movement I'm looking for. That's why I'm still a bear in crude. Think about shorts in copper as well. We'll talk about that in another video, but this is still what we're playing in crude, and I am looking for a -1 standard deviation target to the downside as I use this V-score to gauge where the standard deviation support may be. I'll see you in the next update.